In this chapter, we will cover the last step in the planning phase of an audit, which is a critical step in finalizing the audit strategy and entire audit program that the auditor plans to follow. At the end of Chapter 13, you should be able to do the following. You should be able to use the 5 types of audit tests to determine whether financial statements are fairly stated. Be able to select the appropriate types of audit tests. Understand the concept of evidence mix and how it should be varied in different circumstances. Design an audit program. Compare and contrast transaction-related audit objectives with balance-related audit objectives and presentation and disclosure-related objectives. Be able to understand key evidence-related terms and integrate the 4 phases of the audit process. Let us begin by discussing the 5 types of audit tests to determine whether financial statements are fairly stated. Auditors use the results of risk assessment procedures to determine the type and amount of further audit procedures necessary to form an opinion on the fairness of the financial statements. These further audit procedures include the test of controls, substantive tests of transactions, substantive analytical procedures, and tests of details of balances. In here, we have an illustration of the relationship of the 4 types of further audit procedures mentioned in the previous slide. As this figure shows, tests of controls are performed to support a reduced assessment of control risk, while auditors use substantive analytical procedures and tests of details of balances to satisfy plan detection risk. Substantive tests of transactions affect both control risk and plan detection risk because they test the effectiveness of internal controls and the dollar amounts of transactions. The combination of these 4 types of further audit procedures provides the basis for the auditor's opinion. You can find figure 13-1 on page 410 of your textbook. The first type of further audit procedure we will discuss is the test of controls. Test of controls is the audit procedure performed in order to obtain sufficient appropriate evidence to support a reduced assessment of control risk. The test of controls may include the following procedures by the auditor, which are to make inquiries of appropriate client personnel, to examine documents, records, and reports, to observe control-related activities, and to reperform client procedures. The amount of evidence needed for test of controls depends on 2 things: the extent of evidence obtained in gaining the understanding of internal control, and the planned reduction in control risk. Figure 13-2 shows the role of test of controls in the audit of the sales and collection cycle relative to other tests performed to provide sufficient appropriate evidence for the auditor's opinion. Note the unshaded ovals with the words audited by TOC and 3 general ledger balances that make up the sales and collection cycles, and the beginning balances in the cash and accounts receivable were audited in the previous year and are considered correct. If the auditors verify that sales and cash receipts transactions are correctly recorded in the accounting records and are posted to the general ledger, they can conclude that the ending balances in accounts receivable and sales are correct. One way the auditor can verify recording of transactions is to perform the test of controls. If controls are in place over sales and cash receipts transactions, the auditor can perform tests of controls to determine whether the 6 transaction-related audit objectives are being met for that cycle. Substantive tests of transactions, which we will discuss in the next slide, also affect audit assurance for sales and cash receipts transactions. You can find figure 13-2 on page 411 of your textbook. In here, we have an illustration of tests of controls, which are procedures the auditor would perform for a key entity control. For example, an entity's key control for sales transactions is to internally verify each sales of the company. The auditor would perform a test of the key control for the sales transactions by examining documents used for internal verification. Another example would be a key control related to shipping, where shipping documents are electronically forwarded to billing daily and are billed the subsequent day. The auditor would perform a test of control by observing whether shipping documents are forwarded daily to billing, and then observe when they are actually billed. You can find table 13-1 on page 412 of your textbook. The second type of further audit procedure we will discuss is substantive test of transactions. Substantive test of transactions is used to determine whether all 6 transaction-related audit objectives have been satisfied for each class of transactions. Although not required, substantive analytical procedures may be used to audit an account balance. The 2 most important purposes of substantive analytical procedures are to indicate possible misstatements in the financial statements and to provide substantive evidence for the audit. The primary emphasis of the test of balances is on the balance sheet. If you refer back to figure 13-2, you will find a summary for the types of tests the auditor may use. This figure was shown in a previous slide and can be found on page 411 of your textbook. Moving on, we will now discuss the appropriate types of audit tests. Each of the 4 types of further audit procedures involves only certain types of evidence. The relationship between further audit procedures and the types of evidence are summarized in table 13-2. The auditor must decide which type of test to select for obtaining sufficient appropriate evidence, and the cost of the evidence is an important consideration for every audit. The following are the types of tests in order of increasing costs. The first is substantive analytical procedure is the most expensive type of procedure or evidence to gather. Second is risk assessment procedures. Third is test of controls. Fourth is substantive test of transactions. And the fifth is the test of details of balances. In here, we have a summary of the relationship between further audit procedures and types of evidence. The following observations about the table can be made. More types of evidence, 6 in total, are used for tests of details of balances than for any other type of test for an audit. Only tests of details of balances involved physical examination and confirmation. inquiries of the client are made for every type of test. Inspection is used in every type of test except substantive analytical procedures. Reperformance is used in every type of test except substantive analytical procedures. The auditors may reperform a control as part of a transaction walkthrough or to test a control that is not supported by sufficient documentary evidence. Recalculation is used to verify mathematical accuracy of transactions when performing substantive tests of transactions, and account balances when performing tests of details of balances. You can find Table 13-2 on page 415 of your textbook. When tests of control show deviations that lead the auditor to believe that there may be material misstatements, the auditors then perform substantive tests to determine whether a material misstatement actually occurred. Analytical procedures only indicate the likelihood of misstatement. Unusual fluctuations indicate an increase in the likelihood of the misstatement. During planning, auditors decide whether to assess control risk below the maximum. If they do, they must test the controls. In here, we have an illustration of the relationship between substantive tests and control risk assessment, including tests of controls at different levels of internal control effectiveness. The shaded area in Figure 13-3 is the maximum assurance obtainable from control risk assessment and tests of controls. At any point to the left of point A, assessed control risk is 1 because the auditor initially evaluated internal controls as ineffective based on the performance of risk assessment procedures. Notice in this figure that any point to the right of point B results in no further reduction of control risk because even with maximum reliance on controls, some substantive procedures are still required in an audit of financial statements. Because the audit of financial statements and the audit of internal control over financial reporting are integrated, accelerated filer public company audits will most likely be represented by point B. Assuming that the auditor determines that the design of internal control is effective and the controls are implemented, the auditor selects a point within the shaded area of the figure that is consistent with the assessed control risk the auditor decides to support with the test of controls. Assume the auditor contends that internal control effectiveness is at point C. Tests of controls at the C1 level will be extensive to support the low assessment of control risk. The auditor may then determine through the performance of tests of controls that the initial low assessment of control risk at point C is not supported and that internal control is not operating effectively. Then the auditor revised control risk assessment would be at the maximum, which is point C3, and audit assurance will be obtained from substantive tests. Any point between the two, such as C2, represents situations where the auditor would provide an assurance obtained from tests of controls less than the maximum level of assurance represented by point C1. If C2 is selected, the audit assurance from tests of controls is C3 to C2, and from substantive tests is C to C2. The auditor will likely select C1, C2, or C3 based on the relative cost of tests of controls and substantive tests. You can find Figure 13-3 on page 417 of your textbook. We will now discuss the concept of evidence mix and how it should be varied in different circumstances. The types of evidence chosen and the extent of use by the auditor varies widely from audit to audit based on levels of internal control effectiveness and inherent risks. The combination of the types and amounts of evidence needed in an audit is referred to as the evidence mix. 4 different audit scenarios are shown on page 418 of your textbook, giving information about the internal control effectiveness, size of the company, and other factors. The evidence mix for each of these scenarios are shown in Table 13-3 on the next slide. In here, we have an illustration of the 4 different audits. In each case, assume that sufficient appropriated evidence was accumulated. In each audit, you should be able to determine the description of the client from the evidence mix in Table 13-3. Audit 1 is likely a representation of the mix of evidence used in the integrated audit of a public company's financial statement and internal control over financial reporting. Emphasis is on the test of controls and substantive analytical procedures. Audit 2 illustrates a company with some controls and a few inherent risks. The auditor has decided to do a medium amount of testing for all types of tests except substantive analytical procedures. Audit 3 illustrates a company that has a few effective controls and significant inherent risks. No tests of controls are done because reliance on internal controls is inappropriate when controls are insufficient for a non-public company. Audit 4 illustrates a company where the auditor has concluded that the internal controls were not effective. Extensive tests of details of balances are performed to offset the unacceptable results of the other tests. You can find Table 13-3 on page 418 of your textbook. Moving on, we will next discuss designing an audit program. The auditor uses risk assessment procedures to determine the appropriate emphasis on each of the other 4 types of tests and design the specific audit procedures for each type of test. These audit procedures are combined to form the audit program. The audit program will include procedures to satisfy all audit objectives, but here the focus is on designing audit programs to satisfy transaction-related and balance-related audit objectives. Besides the risk assessment procedures, the audit program is designed in 3 additional parts: the test of controls and substantive test of transactions, substantive analytic procedures, and test of details of balances. In here, we have an illustration of the methodology used to design tests of controls and substantive tests of transactions. We previously discussed the steps in the first 3 boxes in Chapter 12. The audit procedures include both tests of controls and substantive tests of transactions, which vary depending on assessed control risks. When controls are effective and control risk is assessed as low, auditors put heavy emphasis on tests of controls. Some substantive tests of transactions will also be included. If control risk is assessed at maximum, only substantive tests of transactions will be used by the auditor, assuming the audit is of a smaller public company or a non-public company. You can find Figure 13-4 on page 420 of your textbook. When designing these tests, auditors emphasize satisfying the transaction-related audit objectives. Auditors follow a four-step approach to reduce assessed control risks. Apply the transaction-related audit objectives to the class of transactions being tested. Identify key controls that should reduce control risks for each transaction-related objective. Develop appropriate tested controls for all internal controls that are used to reduce the preliminary assessment of control risks below maximum. And for potential types of misstatements related to each transaction-related audit objective, design appropriate substantive tests of transactions, considering deficiencies in internal control and expected results of the test of controls in Step 3. In here, we have a summary of the four-step approach to designing tests of controls and substantive tests of transactions discussed in the previous slide. You can find figure 13-5 on page 421 of your textbook. Because substantive analytical procedures are relatively inexpensive, many auditors perform them on all audits. The key decisions involved in designing tests of details of balances are to identify significant risks and assess the risk of material misstatement, set the performance materiality, assess control risks for the sales and collection cycle, design and perform tests of controls and substantive tests of transactions, design and perform substantive analytical procedures, and design tests of details of accounts to satisfy balance-related audit objectives. Figure 13-6 is a summary of the methodology for designing tests of details of balances applied to accounts receivable. The key decisions in designing tests of details of balances seen in this figure was discussed in the previous slide. You can find figure 13-6 on page 422 of your textbook. In here, we have a summary of the discussion about the approach to designing tests of details of balances applied to accounts receivable. The light shaded boxes on the left side of the figure corresponds to the design of tests of controls and substantive tests of transactions. This figure builds on figure 13-5 that was previously discussed by also showing how tests of controls and substantive tests of transactions affect the design of the test of details of balances. Other factors affecting that decision are shown in the darker shaded boxes on the right side of the figure. You can find figure 13-7 on page 424 of your textbook. The various planning activities we have discussed in chapters 6 to 13 are applied at different levels of disaggregation depending on the nature of the activity. The levels range from overall audit to balance-related audit objectives. An example of the disaggregation level to which planning activities are applied is illustrated in figure 13-8 on page 425 of your textbook. Auditing standards require the auditor to use a written audit program. An audit program for tests of details of balances for accounts receivable is shown in table 13-4 on page 427 of your textbook. Our next discussion will cover the comparison and contrasting of transaction-related audit objectives with balance-related audit objectives. Tests of details of balances are the primary test to reduce detection risk to an acceptable level. Even when all transaction-related audit objectives are met, the auditor will still rely primarily on substantive tests of balances to meet the following balance-related audit objectives, which are realizable value and rights and obligations. Table 13-5 gives a general presentation of these relationships and illustrates that even when all transaction-related audit objectives are met, the auditor will still rely primarily on substantive tests of balances to meet the following balance-related audit objectives of realizable value and rights and obligations. Additional substantive tests of balances are also likely for the other balance-related audit objectives, depending on the results of the test of controls and substantive tests of transactions. You can find Table 13-5 on page 428 of your textbook. Moving on, we will now discuss the key evidence-related terms. Several evidence-related terms have been used in the past several chapters. Table 13-6, which will be on the next slide, summarizes each of the key evidence terms. The four phases are shown in the first column of Table 13-6. Audit objectives are objectives that must be met before the auditor can conclude that any given class of transactions or account balances is fairly stated, as shown in the second column of Table 13-6. Types of tests are the 5 types of audit tests, as shown in the third column of Table 13-6. Evidence decisions are the 4 subcategories of decisions that is shown in the fourth column of Table 13-6. Types of evidence are the 8 broad categories of evidence, as shown in the last column of Table 13-6. In here, we have Table 13-6, which shows the relationships among the 5 key evidence-related terms as mentioned in the previous slide. The 4 phases are shown in the first column. The objectives that must be met before the auditor can conclude that any given class of transactions or account balance is fairly stated is shown in the second column. The 5 types of audit tests are shown in the third column. The 4 subcategories of decisions are shown in the fourth column of the table, and the 8 broad categories of evidence are shown in the last column. All of these terms have been discussed in detail in previous chapters. You can find Table 13-6 on page 429 of your textbook. Moving on, we will now discuss integrating the 4 phases of the audit process. Phase 1 involves planning and designing an audit approach. Phase 2 involves performing tests of controls and substantive tests of transactions. Phase 3 is performing substantive analytical procedures and tests of details of balances. The timing of tests is shown in Table 13-7, which will be on the next slide. Phase 4 involves completing the audit and issuing an audit report. In this phase, the auditor performs additional tests for presentation and disclosure, accumulates final evidence, issues the audit report, and communicates with the audit committee and management. The summary of the audit process is illustrated in Figure 13-9 on page 430 of your textbook. Table 13-7 illustrates the timing of tests. For example, it shows analytical procedures are performed before and after the balance sheet date. It also shows that tests of details of balances are normally done last. On some audits, all are done after the balance sheet date. You can find Table 13-7 on page 431 of your textbook. This concludes our discussion for Chapter 13. Please complete the required evaluation method for Chapter 13 as it will be part of your final grade. Use Blackboard and Pearson's My Accounting Lab to complete the requirements. You have reached the end of the course presentation for Chapter 13. Please access the video for Chapter 14 for the next presentation of the course.